Hiya. Thank you again for joining us here at Trade Delicious. We're super excited to bring you another video, another educational piece of content. And today we're talking about something that's not just going to be important in the future. It's not just something that's important today, something that's important in the past. It's something that's going to be important evermore. What in the world am I talking about? I'm talking about the EIA Short-Term Energy Outlook, oftentimes referred to as the STO. It is a collection of reports and forecasts that forecast the near-term perspective on energy markets. In this case, that means from month published to the end of the year. So today is June. June numbers and June perspectives are going to be published towards the beginning of the month and each month until the end of the year. That makes a lot of sense. But each month also covers a forecast for the preceding months to the end of the year. So June will include analysis for July, August, September, October, November. July will include July, September, October, November as well, August. All that fun stuff's going to be wrapped up. And once we get to the end of the year, the EIA produces a annual outlook, which is their longer term outlook data. This report is a collection of statistics and analytics used to create this outlook, and it comes directly from the U.S. Energy Information Administration. That's what we mean when we say the EIA. So getting into it a little bit, what is included in this report? I know a lot of time when you're looking at these different events as traders, it's oftentimes like looking at the family mutt, right? You know you love him, you know he's important, but you really don't know what kind of breed he is. He's a German golden beagle, right? Well, the STEO is nothing like that. This thing is purebred and is probably a German Shepherd. Why do I say that? It's because it comes with raw data and energy. It comes with models. This thing can do tricks, and it has beautiful analysis. It is wicked smart, just like you would expect out of the family dog and a German Shepherd or poodle, something like that. What you see in these reports oftentimes includes a lot of data, a lot of really useful data. Why do I say that? Because as you can see in this particular table, this is showing world production month over month for a collection of different places in terms of crude oil, NGPL. We can get really, really detailed about the kinds of petroleum and the kinds of energy liquids that are being produced around the world. This allows us to start drawing our own conclusions about where the energy market is going to go. And it lets us take time to compare our own analysis to the analysis of these statisticians and economists that are producing this information. It's one of the reasons why it's so incredibly valuable to read these kinds of reports. Obviously, energy is a huge part of GDP for a collection of countries, including us here in the States. As you can see here, we hover really around this 5% mark in terms of GDP, but other countries, like the UAE, see slightly higher portions of their GDP dedicated to energy. In the case of UAE, they have 7% or more of their energy dedicated to energy. So this is incredibly important for traders, not only that are looking to trade something like a Marathon or a BP, but think about something like Canada, a currency that is very, very, very heavily dependent upon oil production and oil cost. These types of reports move those kinds of products. That's why we have to pay attention. That's why we have to really look into the details of these kinds of reports. Speaking of the details of these kinds of reports, what is the headline figure? There isn't one. Blasphemy. I know. It doesn't make sense. I get it. Well, unlike most trading events, the EIA STO is a report containing a collection of numbers that are valued relatively equally. Unlike most events, this report printing does not always provide a quick market reaction as a result of having no headline. So if this thing comes out at 10 a.m. on a Tuesday, Eastern Standard Time, you may not see a pop in futures or in Brent or anything like that, even if it is connected to crude, because it takes time for the market to go through this report and digest everything. We start to see moves later on and over longer periods because institutions and governments take a look at this data and start making different adjustments. For example, here in the States, we're looking to refill our strategic energy reserves Something like the EIA perspective might tell Biden, it's a good time to start buying. So the U.S. government may step in and start buying a couple million barrels here and there. China might step in and start buying 1 million barrels here and there, depending upon the outlook from these types of reports. That's one of the reasons, again, why this is so pertinent and so incredibly important. There are really 9 categories to this report that we're going to be talking about. These are the most important, and these are the core of the report. Those, of course, include global oil markets, global oil consumption, the U.S. economy, U.S. distillate fuel consumption, U.S. liquid fuels consumption, natural gas production, natural gas prices, electricity generation, electricity prices. So as you can see, we really cover the whole gambit of energy, particularly for the U.S. So if you're looking to trade any assets that have anything to do with this report is for you. Now, how do we analyze this data? There's a lot of things I just threw out at you. 9 categories, all these reports, stats. We're traders, not mathematicians, right? Well, the interpretation, as always, of data depends on the current economic conditions, right? All data assumes no major policy changes, so that's a really important thing to keep in mind. So if, for example, Biden decides to refill the strategic energy reserves quicker than expected, that could have a really intense bearing on what the next month's STO looks like. STEO looks like. That's incredibly important and wildly vital to keep in mind when you're looking at this data, and always take everything you see with a grain of salt. As I said before, the data often results in longer-term position changes for large institutions and nations. For example, in the EIA that came out today in June of 2023, the EIA STO estimates that Brent crude prices will be somewhere above $78. Today it was trading around 76 maybe. So that's not a big jump from where we are. That's not enough to really compel countries or organizations to say, I need to buy a bunch or I need to sell a bunch. But let's look at the landscape. Right now, inflation is a really big conversation for the Federal Reserve. So they do not want to see oil prices continually raise. There's not much that they could do about it. But what they can do is do something like raise interest rates. Make it more difficult for companies to borrow money, make it more difficult for people to get credit, make it more difficult to get loans. So hopefully that causes people to buy less oil and the price is driven down. On the other side of things, a country like Saudi Arabia doesn't care about what's going on here in the U.S. They want to produce as much money as they can selling their oil. So what happened in this past OPEC meeting? Saudi Arabia announced, we're going to cut 1 million barrels a day starting in July. So when you look at things from that perspective, this data really matters when you're thinking about the big picture and also thinking about the parties that are at play and how it's going to affect those parties and therefore the assets that you're looking to trade. Commodities are unique. They're physical goods that are refined by either behemoth companies or state-run companies. So when the price goes up, that benefits these companies. Their costs generally don't go up much, even though the price is so volatile. So as prices grow, profits grow. Meaning a rise in oil is great for some parties at any time, think like a Saudi Arabia, whereas others, it could become a hurdle. U.S. presidents are well known for having a connection to oil prices and gas prices here in the States. Although they have very little control over it, it's an incredibly important point for their running for re-election. So they'll do everything they can to keep gas prices low, whereas Saudi Arabia will do the opposite. If the EIA comes out bullish, as an example, with data supporting a rise in price, equities traders could cash in on oil names like BP. If the EIA STO comes out weak, currency traders could potentially swing trade the dollar CAD to the upside. Again, think about the things that are going to affect the assets that you're trading. Oil is incredibly connected to the Canadian dollar, not nearly as much here in the States. So a pair like that, where the Canadian dollar is falling in value, would see this pair go up in value, right? Think about it. Now in 2023,
growth in any price, as I said before, means inflation. And inflation means inflating those interest rates. So, obviously, from that perspective, the positive, the bullish production of a EIA STO isn't necessarily the best thing for the economy, although it may be a really great thing for countries and companies that are very connected to oil. As always, every report is part of a much larger whole. As always, thank you guys so much. That's really all I got for you. This is just a basic overview of the EIA STO. As always, all the data you see is stuff that I pulled directly from their websites. If you ever have a moment, please check it out. It is absolutely fantastic, and it's a great way to learn more and understand more about the macroeconomics that make us better traders day in and day out. As always, trade well out there and trade delicious. I will see you.